Have you looked at the stock market lately and just scratched your head? I mean, on one hand, US stocks are hitting these incredible new records. But then you look at the news and it's all about economic uncertainty and political chaos. It really feels like the market is being pulled in two completely different directions at once. And today, we're going to figure out why. Okay, let's just jump right into this paradox. The S&P 500, it's touching all-time highs. Normally, that's a huge sign of confidence, right? But it's happening at the exact same moment that the world's major central banks are sending totally mixed signals, and a potential government shutdown in the US is threatening to just turn off the tap on all the economic data we rely on. So what gives? The best way to really understand what's happening is to picture a giant tug of war. Seriously, on each side of that rope, you have these incredibly powerful forces yanking the market in opposite directions. And it's that tension, that constant pulling that's creating all this volatility and confusion. So let's break down who exactly is pulling on that rope. First up, let's talk about the first major force, the world's most powerful central banks. We kind of assume they all move together, in lockstep. But right now, they are definitely pulling in very different directions. So on one side of the rope, you've got the U.S. Federal Reserve. Now, they just cut interest rates, which is typically a dovish move meant to boost the market. But right after, they use some very hawkish language, hinting they might not cut again anytime soon. Meanwhile, on the other side, Europe and Japan are just holding steady, basically signaling they're pretty happy to keep things loose for now. This whole move by the Fed is so weird, it actually has a name: a hawkish cut. Yeah, you heard that right. The idea is to give the economy a little nudge by cutting rates, but also talk tough to keep a lid on inflation fears. But the result? Well, it just sends a deeply confusing signal to investors about what the Fed's going to do next. And the effect on currencies was, well, immediate. Because the Fed sounded tougher than everyone else, money just flooded into the US dollar, making it stronger. At the same time, the easier policies over in Europe and Japan caused their currencies to weaken, and the yen actually tumbled to a multi-decade low. It was a huge move. And get this one single move completely reset what the market was expecting. Before that Fed meeting, traders were betting there was a 90% chance of another rate cut in December. 90%. After that one hawkish cut, those odds just plummeted all the way down to 69%. That is a massive shift in confidence, all because of a few carefully chosen words. Okay, so let's look at the second major force in this tug of war. Because the conflict isn't just between countries. There's this huge divide opening up right inside the stock market's most important sector, tech. This quote just hits the nail on the head. It perfectly captures the new mood among investors. It seems like the days of just throwing money at any company that even whispered the letters AI are fading. Now it's all about seeing real, proven, profitable results. So what does that actually look like in practice? Well, on one hand, you have a company like Amazon. They posted fantastic earnings, mostly driven by their super profitable cloud business, and the market absolutely loved it. But on the other hand, you have giants like Meta and Microsoft talking about spending billions and billions more on these huge long-term AI projects. And investors? They got nervous and started selling. And I mean, the numbers really do speak for themselves. In just 1 week, Amazon stock soared almost 10%, while Meta's dropped 7%. It is such a clear signal that investors are getting way more picky. They want to see profits now, not just promises about the future. Okay, so we've got a split between central banks and a split happening inside of tech. But to make this whole tug of war even crazier, there's a wild card in the mix: a potential data blackout, all caused by the looming US government shutdown. So why is this such a massive deal? Well, it all comes down to two little words the Federal Reserve uses all the time: data dependent. It just means they base their incredibly important decisions on the latest economic numbers. But what happens when that data suddenly vanishes? Well, it kicks off this really dangerous chain reaction. The government shuts down. That means the agencies that put out those crucial reports on jobs and inflation, they stop working. This forces the Fed to make decisions while, as one source put it perfectly, driving in the fog. And the result of that? A huge spike in uncertainty for absolutely everyone. The bottom line here is pretty stark. The very people steering the world's largest economy and all the investors trying to figure out what to do are essentially flying blind. And that makes every single decision riskier and every market move that much more unpredictable. So, with all these different forces pulling the market apart, how on earth do you make sense of what's coming next? Let's quickly break down the key things you need to watch in the week ahead. All right, first up, we're going to get some business sentiment data from the ISM surveys. That's a really crucial non government look at the economy. Second, listen very closely to any Fed speeches. With official data offline, every single word from the 10 plus officials speaking this week is going to be picked apart for clues. Third, earnings season is still in full swing. And finally, the big one, the October jobs report, which, may or may not even be released. So, where are the biggest potential explosions? Well, the jobs report is sitting right there at the top with a very high potential impact. It really is the key piece of the puzzle. But whether or not it even gets released is the biggest question mark hanging over everything. That single point is what's causing most of the uncertainty for the entire week. So if you remember one thing from all this, make it this. In a market that is this divided and this uncertain, the focus is really shifting. Investors are now prioritizing quality companies that have proven profits, and they're putting a huge premium on reliable economic data, whenever they can actually get their hands on it. And that leaves us with the ultimate question as we look ahead. With stocks sitting at record highs in the face of all these conflicts, is this a sign of a truly resilient market that can just shake off all the shocks? Or is it a market that's simply ignoring all the flashing warning signs? That, right there, remains the billion-dollar question.